Good afternoon, everybody. I'm Stacy Scott, and I'm here with Graham Wickham, President and CEO of Wickham Financial and Insurance Services, and we're back with our weekly wrap-up. Graham, we had a really good market last week, right?
We really did have a great rally in the market last week, and really off the back of lower CPI numbers. Now, still starting high, came in about 7.7%, but less than what was expected. And remember, to our viewers, our listeners, we said, hey, listen, if we start to see a rollover of these CPI numbers, these inflation numbers, it's very likely that the Fed doesn't have to be as aggressive. Maybe they'll blink, and the market can use that as some clues to rally off of. But I do want to be a bit cautious in that statement, is that the Fed still has work to do. Inflation still is high. We're not out of the woods. But boy, it's been a nice direction so far. I mean, we saw the Nasdaq up about, what was that, about 8% last week, and we saw the S&P and the Russell up about 5-6%. We saw the U.S. dollar really pull back, so that's good for international markets and our currency as an equivalent. Gold and copper, that side of the market popped up about 5-6%. So basically, we saw all 11 S&P sectors up last week, and really led by technology materials, up 8 to 10% respectively. And that makes sense. The ones who had fallen the most usually are the ones who rise the quickest, right? It didn't hurt to see the 10-year yield pull back a little bit, and we came off of that about 35 basis points. But we still saw an increased inversion of that yield curve, which is that ominous signal that's still signaling a recession in the future. If we think internationally, we're still seeing some pain and pressure internationally. Britain basically, had a contraction of about 0.2%. The European Commission slashed their growth, but increased their growth expectation and increase their inflation expectations. But one nice spot, besides international markets bouncing up like the U.S., we saw China maybe relaxing a bit on their COVID policy, maybe some restrictions on international travel. But one thing I think was not overshadowed, because it was a huge thing last week, was cryptocurrency and the collapse of FTX. That was one of the largest, if not the largest, crypto exchange, really putting a big question mark on the viability, sustainability, accountability when it comes to that crypto side of that market, that very risky, speculative side of the market. And even though that had all that happen, markets still rallied quite well.
All right. Well, with the CPI numbers, a little bit lower than expected, does that mean that the Fed could pause and we could continue to rally?
I personally think, and again, our personal opinion or my personal opinion, I think the Fed needs to kind of take a pause to see where they're at, right? Let's see what damage, because they said they want to create damage, right? What damage have they caused with the rates that they've already increased so far, right? So maybe the pace of rates increasing can slow down. Maybe they'll hint to a blink, or that pause that we've been suggesting, and the market can use it as clue, as an opportunity to continue to perform well. But I would also caution our listeners to say nothing goes straight up, right? You have to expect a little bit of a pause to refresh off of this big game we've had in the very short run.
Okay. Do you think this could be indicative of the Santa Claus rally that we talk about?
I definitely think it's a part of the tailwinds, Stacy. It's a great time of the year. It's a lot of window dressing that goes on. You get a Fed that blinks. You get inflation starting to come down. Listen, that's a recipe for success, not just domestically, but for international stock and bond markets to start to outperform.
Right. How likely do you think it is that we could continue this throughout the end of the year?
Well, like I hinted before, I think all great things do need to have a moment where they just kind of chill out, right? And they kind of pause a little bit. So I would not be surprised that we have a couple days or maybe a couple weeks here that we kind of pause and digest But listen, these are powerful forces going into the end of the year and next year, especially if we get inflation coming down and the Fed blinks. That could lead to more gains.
Well, thank you so much for that.
Yep.
And thank you to our viewers for joining us today. We hope you have a great week, and we'll see you next week on Monday for our weekly wrap up. Thanks so much.
Take care.
Bye-bye.